Silver has long been called the poor man's gold, trading at roughly 1/80,000th the price of gold. But that title may soon disappear. Today, silver is being suppressed around the $50 mark, the same level it reached in 1980 when gold was $850 and again in 2011 when gold was $1,920. Yet now, with gold surpassing $4,000, silver remains under $50. This mismatch shows clear signs of manipulation and shortage. Each year, silver demand exceeds supply, and the deficit is covered by short-term borrowing and rehypothecation, meaning much of the traded silver doesn't physically exist. Once silver breaks above the $50 line decisively, it won't be a resistance point. It will act as a launch pad. The breakout could catapult prices rapidly towards $60, $70, even $80 in the near term. Silver is now at a historic turning point. The metal's physical scarcity, combined with years of price suppression, has created massive upward pressure. Once it crosses $50 decisively, the price could skyrocket within days. Long-term projections suggest that if gold reaches $10,000, as predicted decades ago, silver could theoretically climb toward $666, restoring its historical ratio to gold. At that point, silver will no longer be the poor man's gold. It will become the rich man's silver. Physical availability is already tightening, with increasing global demand from both investors and industrial sectors. Major buyers struggle to acquire physical bars and coins, signaling real shortages. Remember, only physical ownership of silver and gold, held outside the banking system, truly protects wealth. Paper silver is just promises. Physical silver is power. As silver and gold rise, fiat currencies continue their long decline. Since 1971, paper money has lost 99% of its purchasing power. And now it's approaching the final stage, a fall to zero. This collapse reflects deep cracks in the Western financial system. Banks in the U.S. and Europe face rising instability, while central banks print endlessly to stay afloat. The shift away from paper money means real assets, gold and silver, will become the true store of value once again. The Western economies are now facing a reckoning. Their decades-long dominance, built on debt and artificial money creation, is coming to an end. This is not speculation. It's the natural result of unsustainable monetary policy. As the West weakens, economic and political power is moving eastward. The U.S. struggles to maintain global control, using tariffs and sanctions as tools of pressure. But nations like China and India are no longer yielding. China's exports to the U.S. now represent only 10% of its total trade, making American threats less relevant. India, too, has refused U.S. pressure, even ignoring calls from Washington while strengthening ties with China and Russia. This new alliance marks a global shift, from Western fiat dominance to Eastern wealth accumulation through real assets. China, India, and Russia are buying gold and silver at record levels, with reserves far higher than publicly reported. The monetary balance of power is rapidly changing. We're approaching the end of a monetary era that began in 1913 with the Federal Reserve and accelerated in 1971 when Nixon closed the gold window. Now, the Western system stands on the edge of collapse. Stock markets, bond markets, and even real estate are expected to lose up to 90% of their value in real terms when measured against gold. Holders of paper assets face unprecedented wealth destruction. The only way to protect capital is through tangible assets, physical gold and silver held outside the banking system. The time to act is now. Move away from financial illusions and toward real money. Those who prepare will preserve their wealth and peace of mind. Those who delay will face a financial storm unlike any in modern history.